as we get started. I'll probably say this a few more times because I have a tendency to repeat myself. Our presentation is based on all of the information and is current as of March 30th, 2020. As of at least about 1:30 this afternoon, no major changes have come down the pipeline. The information that we're providing is based on our interpretation of the CARES Act after reviewing this law and consulting with a lot of other sources. Um, uh, for right now, this webinar is for educational purposes only. This can't be used to contest any IRS, SBA, other penalties or assessments. So I just want to put that out there, keep that in mind. Um, we are providing as much information as possible. But again, this is based on our interpretation. We make no guarantees to anything here regarding eligibility for the programs, forgiveness, or anything like that. This is merely meant to be educational. And as I said, we'll make efforts to answer all of your questions. And thank you very much for attending. It means a lot to us to see this kind of response to this webinar. So we're going to be doing navigating the key provisions in the CARES Act for businesses and nonprofits. We have a lot of businesses in attendance, a lot of nonprofits in attendance. I will try to keep it educational for both. There are going to be certain areas of this that are maybe a little more business impactful than nonprofit, but generally speaking, most of the provisions that we're going to go over today will apply to both parties. So you just allow me, 15 seconds of shameless self-promotion. I'm tax director at Cerini Associates with over 10 years experience. My expertise includes healthcare, financial services, technology, professional services, state and local tax, and international tax. The firm itself, we're 50 professionals located out on Long Island for those who are currently not clients of ours. Beyond these specialties, we have a heavy focus in education, both public and private providers, nonprofit organizations, and other industries such as construction, manufacturing, real estate, and other things of that nature. So that pretty much covers the shameless self-promotion part, and I'll try to avoid any more of that going forward. So when we're talking about the CARES Act, we're talking about the bill that was passed late on March 25th, signed into law on March 27th of 2020, and is a $2 trillion economic stimulus package. So the key provisions in here are going to be individual tax changes, business and employer tax changes, and the SBA loans for eligible businesses. The law is currently passed right now. And as a result, there are virtually no regulations or other guidance that are available for the application execution. So some of the information we're providing is based on our interpretation. Some of these are educated guesses. We're trying to give you what we think the best practices are and information here. And a lot of specific questions that people may have, we don't necessarily have the answers for yet. We're going to try to make some educated guesses when it comes to it, but overall, some of the nuances aren't really known yet. So we'll do our best to try to help. But my general goal for you as an attendee for this seminar is kind of to raise your baseline knowledge of what's going on. We as a firm will be reaching out to our clients, working with our clients to help them through this, not only this loan package, but this entire scenario that we're all going through right now. It's a little tough. I'm getting cabin fever. I'm sure a lot of other people are. So maybe some of you are enjoying just hearing a voice that isn't your husband or your wife or your kids, and you're listening for that reason and no other. We'll see what happens. Um, okay, so I'm going to lead off what I think is the most popular and interesting provision for a lot of people, the one we're getting the most questions on, the most action, and that is the expansion of these SBA loans. Okay, so I just want to reiterate here, while the loan programs are 100% federally guaranteed to banks, there is no guarantee that I can make that you or your business will be able to get one of these loans. As I said, we're working without guidelines, any real precedent or regulation on these, and interpreting based on the law only. Some of these guidelines or regulations may be different than our interpretations. Very, very possible when it comes to that. Situation is rapidly changing. Again, I saw nothing major come out this morning, but yesterday morning, Secretary Mnuchin said he was going to try to have regulations out yesterday and loans by Friday. Well, No regulation came yesterday. And lastly, something that I want to highlight as a prudent practice. The loans have a forgiveness provision, but we cannot guarantee that all of your spending will be covered or that you will get any forgiveness. So as much as you need to look at this as a grant to help your business right now, you also need to look at this as a potential 10-year loan at 4% interest and keep that sort of viewpoint as you go through the process as much as anything else in place, because I think if something adverse happens that people may not get forgiveness or something like that happens, you at least know what your worst case downside is. So I think that's a prudent business and fiscal management decision to make. um, so the loan program expansions. The CARES Act expanded current 7A loan programs for what's called new Paycheck Protection Program or Payroll Protection Program loans. I used Payroll Protection Program during this presentation because I find it a little easier to say, just being honest, I guess, but it's technically called a Paycheck Protection Program. It means the same program when you see it throughout. The Act also expanded some SBA loan limits, but given how those work, I don't see those being particularly impactful. The Act also made changes to the economic injury disaster loans, which are a different program than the payroll protection loans. We're getting some questions on those. I have some reservations based on my experience on those that I'll kind of discuss through here, but these are separate programs. So what you're currently seeing now for a lot of people is they want to start getting into these loans, they want to start applying, and they go to the SBA website and they see these economic injury disaster loans. Those are very different programs than what these payroll protection loans may be. So you just need to keep that in mind as you go to that website and try to apply, that they're different programs, and I don't want people to confuse them. So the payroll protection loans, 354 billion was allocated to this program. I had 354 million. I'm just used to typing numbers that big, I guess. Um, the loans are 100% federally guaranteed to banks. They include a forgiveness feature based on certain spending and staffing patterns. Again, they anticipated to have guidelines out Monday and making them as soon as Friday. We as a firm at Cerini have been reaching out to our banking contacts. Some of them are saying the timeline could be as early as Wednesday for guidance and potentially, as early as Friday for these. Some of them say that seems like a pipe dream. So we don't know a whole lot yet. We're trying to get more information. We're reaching out to our contacts and trying to get a better sense as to what's going on. But everybody feels like Friday is going to be the key date to be able to start applying for these loans. There's a key question of what is needed, how to apply, and the infrastructure necessary. If you look at the prior history of the EIDL loans when this first started, the SBA had an online application that people were starting to work through. Well, that kept crashing, failing, falling apart, so they had to revamp their entire process because of the extreme interest. So who knows what's going to happen when people try to apply for these. We're going to make every effort possible to be as prepared as possible to get as many people in. We're, promoting a ton of resources. We did our internal training yesterday. We're starting to set up our teams, our processes, so we can help people get these. But there's a lot of uncertainty still when it comes to really, if it's going to even be there. So let's talk about the payroll protection program. Who are the eligible borrowers? Businesses with less than 500 employees, or businesses with more than 500 employees, but less than the SBA published size standard. I don't know how many cases that's going to apply to. I haven't run through all of the SBA size standard for each industry, so I can't necessarily say. And nonprofits are specifically going to be 500 employees. Now, there's a question as to what's an employee and when it's going to count. The law states that an employee is anybody full-time, part-time, or otherwise employed. It is not an FTE as used in other calculations here based on what the law says. They didn't say when the measurement date was going to be for that. And I can't say definitively. My guess would be a good one would be February 15th, 2020, which is what they're calling the start of the covered period. So that's my guess as to when they're going to start measuring employees. They say that 501c3 organizations organizations with less than 500 employees are eligible for these. That's what they specifically said for additional eligibility. They did not comment on any other 501c organizations. There could just be a expectation that most people think 501c3 covers all nonprofits, and it was a drafting error. They may have guidelines that expanded, but the law specifically states 501c3 organizations with less than 500 employees and sole proprietors and independent contractors are available. This is going to be a key point because there's some questions as to what eligible costs are there and is it independent contractors or not. And one argument that independent contractors that your business may pay is not eligible is that these people themselves are eligible for these loans, which could lead to a very easy double dipping scenario. And that is a big argument against as to why they may be available. So keep that in mind, but the law says sole proprietors, independent contractors are going to be available. So those are your eligible borrowers. What can you use these loans for? So the permitted uses are for payroll costs, which we will go over with as much depth as we currently have, for the interest, but not principal, of any outstanding mortgage obligations, rent, payment for utilities, electric, gas, water, telephone, and internet. We don't have much more information on that as a result of that. They just said telephone, internet, water, gas, and electric. They didn't say, relation to hardware that keeps it going or anything like that. We think it means the actual providers. So National Grid, Cablevision, PSEG, those type of providers that give utilities, interest but not principal on prior debt obligations. So that's what you can use these loans for. Now, what are the terms? Per the law, the loans will be made between now and June 30th, 2020. The loans, as we've mentioned, will have a forgiveness feature for certain spending. We will go over the forgiveness in a few minutes as we interpret it. As I mentioned kind of at the outset, any amount not forgiven will have a maximum term of 10 years and a rate of 4%. The loans are 100% federally guaranteed and are non-recourse to owners or board members except in the event of non-permitted uses. So when we say non-recourse, that means there's no personal obligation, no personal guarantee of any business that takes these loans out, except in the event that they're done in a manner that's not permitted under the program. Now, a key question that we've kind of come up with is, particularly when it comes to 501c3 organizations, how are they going to hold and which board members would they hold recourse in that event? There is no owner of a 501c3. It's pretty easy to hold an owner of a business recourse in the event of non-permitted uses. But we don't necessarily know what that's going to mean for non-businesses and how they're going to interpret that. I think that'll be a key point in the regulations that's going to exist. But we just don't have much guidance on that right now, and I think it's a very interesting point and question that has come up. Okay, so the conditions for eligibility on these loans. The borrower had to have been in business or have operations, because obviously a nonprofit is not in business, so it's be in business or have operations as of February 15th, 2020, and the borrower had employees that they paid for salaries or contractors they paid for services. They specifically state contractors paid for services, which is one point in the column of perhaps independent contractor payments will be eligible. Again, a big negative is it gives the potential of double dipping, and it wasn't entirely clear based on my interpretation and a lot of leading other interpretations and publications. We're really curious to see how that's going to work because for certain industries that rely heavily on contractors, that could be, a huge difference for them. And we're very wondering how that's going to actually work. Um, some factors that won't be considered for the loan. So anybody who's dealt with the SBA before knows they have what's called a credit elsewhere guarantee or a credit elsewhere requirement, meaning that if you have access to credit elsewhere, whether it's personally through the business or your business would be able to get credit elsewhere based on an underwriting criteria, they're not going to make the loan to you. They want to be the lender of last resort, quote unquote. They've gotten rid of that obligation or that requirement here. So we don't keep thinking about if you have access to credit elsewhere or not. There will be no personal guarantee from borrowers. Most SBA loans require a personal guarantee with the UCC lien against personal property, including your personal house. That won't be available or required in this case. The loan is completely non-recourse except in the event of non-permitted uses. And along similar lines, SBA loans typically have a collateral guideline in that they will file against any assets of the business for collateral, but you don't necessarily need collateral. In this case, there's no requirement for collateral, no UCC filing against collateral. Why that's important is going to be expediting these loans, because if you have other borrowings with the UCC preference against that, that could have potentially been a huge roadblock to getting these loans to people. And I think when I have questions, one thing I always go back to myself is what's the intent of this program? What are they really trying to do? And then see how that frames my interpretation. So I always think back to they want to help keep businesses open and people on payroll. So they want to make these easy to get and potentially quick to get. Intentions and execution can often be very, very different, but that's what the intent of the program is going to be. Um, as part of your application, you're going to have to make a good faith certification from to the bank that you're borrowing from. There is going to be a certification that the loan is necessary because of the current economic conditions that give you a lot of uncertainty as to what's going on, and you need to maintain and support ongoing operations. Um, the borrower will only use the proceeds for permitted purposes such as occupancy and payroll costs. The borrower does not have an application pending for a loan elsewhere with the same purposes. Now, this is one of the things that's giving me pause on everybody rushing into the EIDLs. People are rushing into those because they're worried about the program running out of money. Everybody needs a lot of help right now, but you cannot get an EIDL and a PPP for the same purposes. And we've seen cases in the past, one that's going to be familiar to us locally is Hurricane Sandy, where people rushed into one program and then another more beneficial program was there and took more time or wasn't 100% flushed out yet, and they weren't eligible to take advantage of the more beneficial program. So that's why I have a pause there. The regulations aren't out there. Documentation that comes from some semi-authoritative sources says that both are available, that you can refinance a EIDL into a PPP loan. I don't know if they're going to actually be able to, in practical terms, be able to process that refinance or really trust them to be able to do it right. And I think these loans, these payroll protection loans with this potential forgiveness feature are such a huge benefit that the idea of potentially jeopardizing it somewhere else is going to be a real difficult thing to swallow if you do that. So that's where I'm being very conservative when it comes to that, and that's part of the reason why is this says you don't have an application pending. Well, if you have an EIDL pending for payroll costs, you may not be able to make this certification. So I have some pause there. Lastly, from February 15th, 2020 to December 31st, 2020, the borrower has not or will not receive a loan for the same purposes. Again, similar point to what I just made in regard to um, the EIDLs, the economic injury disaster loans, which we'll go over a little later on in our presentation. But that's why, I see a lot of people asking me, oh, let me apply for both, let me do this. And sometimes I know we're all anxious. We all want to make sure we get what we need for our businesses and your business. But sometimes waiting a day or two and seeing all the pieces on the chessboard make you have a better play than just trying to rush your pawn out there as fast as possible and getting blitzed by a queen. So, I think about it that way a lot. Okay. So how much can you get these loans for? So the maximum loan amount per law will be either 2.5 times your average monthly payroll cost, which we'll talk about momentarily, or $10 million. So that's the maximum amount this loan is going to be. And the reason I think that I want to highlight this right here is because these have a statutory maximum, that means that when banks give them, they're going to need to look at all of this and figure out what's going on with it. And I wonder how that's going to play in the underwriting. And that's a real question that we've mostly had when it comes to that. But your loan amount will be 2.5 times average monthly payroll costs or $10 million. So payroll costs, what are they? We look at it in this kind of decision matrix here. Is your allowable payroll costs less your non-allowable payroll costs are your eligible costs. You'll take that data over a 12, the law says over a 12-month period prior to the loan. I think, and I think other people have a feeling that there will be safe harbors that allow you to use either smaller periods or your 2019 W-2s, or at least I'm hoping that that's a potential item that's going to be available there, that allow these loans to get written substantially faster and make the burden requirement a lot less on businesses. But I don't know. I can't definitively say, but that's what we're hoping for. But anyway, your allowable payroll costs, what are they? They will be your compensation and pay to employees, wages, salaries, commissions, and other comp. There's a question about are bonuses eligible? We don't 100% know. Um, there is your cash tips or equivalent, your vacation or family or medical leave that you have to pay, and any severance pay that you may have to pay. As well as that, you have your group health benefits, any retirement benefits, which we're taking to mean 401ks, unknown about other types of retirement plans, how those may come into play. Your state and local payroll tax assessed on payroll, that will in most cases only be the metropolitan commuter tax. I don't think state unemployment insurance will count because it's not technically a tax, but rather is a insurance assessment that is levied by the state. And then I have here potentially payments to independent contractors. We can't definitively say if they're included or not. Many people's interpretation is it may be. It may be. We will give more detail as it becomes available. As I kind of highlighted before, there's a potential double dip here, and that's why we think there's a good chance they won't be. But the eligibility discusses that if you've had prior payments to contractors and some other areas talking about documentations talk about amounts paid to contractors as well for a business, particularly in the forgiveness area. So, there is that to come up, and we're not 100% sure yet. We're really trying to figure out if it is or not. We're hoping to get more guidance accordingly. What are your non-allowable payroll costs? Any employer taxes, payroll taxes, other than state and local taxes. So we're talking really about Social Security and Medicaid tax. Any compensation for an employee not located in the U.S., any wages where credit under programs, this will be the FFCRA, the Families First Coronavirus Relief Act, which expanded the FMLA, and paid and sick leave for that is not going to be an eligible cost. And any compensation in excess of $100,000. The law says in excess of. The mechanics of that weren't entirely clear when it comes to calculating average payroll cost because it specifically says that it's only for excess during the period that the loan is covered prorated. So don't 100% know how that's going to work. I think the common expectation is it'll just be also taken off the top of your eligible payroll cost when you do the monthly calculation. That's how we're going to be handling it when we do our estimates and trying to help people get ready. But when the guidelines come out, that may be different. So there's a little bit of question as to how that's going to work. So I wish I had more on that one, particularly in the Long Island, New York metro area, where I think that issue is going to be a more interesting and bigger one than maybe, other places. But when more comes out, we'll start looking and figuring through. But that's what your allowable payroll costs are: your compensation, group health, retirement, and not your payroll taxes. A lot of people who are starting to calculate this are talking only about compensation, forgetting two key areas they may be able to get. You think about how much health insurance costs. One thing that business owners and us always talk about is how much will your premiums increase this year, and it's a big cost for a lot of businesses. So don't forget to include that. Okay, so as of right now, there's no application available yet. I have tons of clients who are asking their bankers. I have reached out to bankers I know. I've tried Googling it. I Google it probably every 45 minutes. I'm going to ruin my Google algorithm for the rest of my life because it's going to think all I'm ever going to want is loans. But it is what it is. We keep trying to get an idea, but as of right now, no application is available, nor are these loans available to be originated. I want to stress that point. The expectation is that these loans will be originated by existing SBA lenders. They want people to use their current existing banking relationship where possible to get these loans. Now, some smaller banks have already started to state that they will not be doing these loans. You should try to reach out to your banker to get a sense of if they are going to be participating in offering these loans or not. We're going to make the pretty safe assumption that all major banks will be. Your Chases, your Wells Fargo, Citibank, B of A, but some smaller regional banks that people may use for different purposes and or some credit unions may not. So now is a good time to find out, because if it's not, we're going to need to start preparing to help. You're going to need to start preparing to find a different lender to help you with this as a result. Now, we don't know, again, what documents are needed. I have, based on what I think is the most you could need. I tell people that I talk with, I'm going pretty Boy Scout on this. I am probably overkill, overprepared on this list, but when I'm facing uncertainty like this, I feel like that's one of the only ways I can help myself and kind of get a little sense of comfort as being as prepared as possible for something. So I broke the recommended documents into 3 tiers. Your tier 1 stuff, most important, is your calculation of your average monthly payroll amount, your key business information, EIN, addresses, phone numbers, ownership, things like that, your 2019 W-2s, 2019 1099 miscellaneous, and all 4 quarters of 2019 941 and NYS 45s. Those to me are going to be probably the Broadway documents that you're going to end up needing. My tier 2 items are things that I think are going to be possible, or not necessarily 100% there, but I think very possible are going to need your January 2019 through March 2020 payroll registers. I don't know how they're going to calculate this 12 months of payroll, so I'm prepared for as far back as possible. Copies of 2019 through March 2020 group health invoices, your last 2 years filed business tax returns. If you're on extension for 2019, don't worry about it. We can use 2018 and 2017. Um, details from your accounting system, your general ledger detail. I'd say I want to see it for gross wages, 401k match, group health, and any contractors. And if for those of you who have 401k plans, you may be familiar with the idea of filling out a census, where you take a bunch of employee information, put it together. We think that having a census of your contractors and your employees will be the most relevant information that you're going to need. Tier 3 information I think we're going to need: year-to-date financials, the last 2 years tax returns for any 20% owner, and Form 4506T. Now, for any of you who have been to our website or have otherwise been in communication with us, we've put together a PDF guide on these loans, which basically takes the presentation that's in this PowerPoint and puts it into a PDF guide. So if you have any questions or anything like that, that what's on here, or you don't have a copy of the presentation, know that it's in there. But the things I think that are most important will be your average monthly payroll, the key business info, your 2019 W-2s, 1099s, 941s, NYS 45s. Those are going to be the most important thing. Now, one question that's, I'm sure on some people's minds, what if they have a PEO? Um, you know, they're not going to be able to necessarily provide 941s and NYS 45s because of PEO files with a bunch of people. But I'm sure they have appropriate substitute documentation that will be acceptable in this case. And I would try to get whatever is closest to that in order to be prepared going forward. Okay, so now we talked about how much the loan can be, what we think you're going to need to get the loan. Now let's talk about the really popular feature here of what are the forgiveness provisions on these loans, right? So as I said in the first, I can't guarantee anything about this loan being forgiven. Prudent business says, let's make sure that we see this as a loan at 4% over 10 years, knowing that there's a above average chance it will be forgiven, but be prepared for your worst case scenario as well. I think for a lot of businesses, there's a sense of, why are we so worried about having to pay back if we're not even being in business if we don't get it? That's also a very fair question that exists, but just, I want to be as prudent as possible where possible. So how is the loan forgiven? You basically take your forgiveness eligible spending less any reductions, and that's how much your loan amount forgiven is going to be. So your forgiveness eligible spending is going to be the amount that you spend on the first 8 weeks after origination on payroll, sorry, your first 8 weeks after origination of the loan, the amounts that you spend on payroll costs under the same definitions as prior, interest on mortgage obligations that were in place prior to February 15th, 2020, rent on lease in place prior to February 15, 2020, any payments on the listed utilities prior. Those are your forgiveness eligible spending. What is your ineligible spending? Amounts in payroll costs in excess of 100,000 per annum prorated. So with the 100,000, you're going to need to take it into account 401k match and group health benefits to get there. Keep that in mind as we take a look at that. As they are going to give you more for that, they're going to also take away less for that. So just that's going to be a key point people need to think about. You'll note that interest on other debt obligations is allowable use of proceeds, but is not going to be an allowable for forgiveness. So keep that in mind. I would try to avoid using that where possible. There are other ways. I see many lenders who are willing to talk about deferments right now on those existing obligations. I think that's a better idea for many businesses, but I think each one has their own facts and circumstances that need to be considered when it comes to that. So don't just blanket say, oh, Ed said I should ask for a deferment, not use it for that. You should look at it in your whole picture, working with your team of advisors to figure out what's best for you in your individual situation. So when we talk about reductions, what are we talking about here? So it's going to be your forgiveness eligible spending times an FTE reduction ratio, and then your forgiveness eligible spending times any payroll reduction above 25%. Now, a big question that has come up in the last 24 hours that I don't have 100% clarity on, is this an and provision where both are going to happen, or an or provision where the greater of one of these is going to be what you reduce it by? I don't 100% know that. My belief is it's an or provision, but the law doesn't say anything about which one you have to use, and normally in or provision, it'll say the greater or lesser of to give that kind of clause in there. So I don't know per se, because what I'm starting to get concern on is getting double hit on an FTE reduction. Let's say that you have two less employees, so that's going to now make your ratio lower, and your payroll for them, because you have two less, has been reduced technically by 100%. So you have a 75% reduction as well. I very, very highly doubt they're going to double dip like that. It doesn't fit the spirit of the law that I was talking about, but I can't say definitively, and I want to be prepared for all possible ideas as I look at this program and how it's going to impact our business, our clients, the entirety of it. I can't imagine a scenario with the spirit of what they want to do where they're going to double penalize people. It doesn't make sense, but they're laws. They don't always have to make common sense. So when we talk about your FTE reduction ratio, what we're referring to is your FTEs, average monthly FTEs per month over the loan period, over your average FTEs per month in a base period, which will either be February 15th to 2019 to June 30, 2019, or January 1 to February 29th, 2020. The loan period is February 15th to June 30, 2020. So they have not given any indication as to how FTEs will be calculated. Other parts of the law reference the Affordable Care Act, and using that, it's typically referenced in a payroll tax credit provision for more or less than 100 employees. So since the ACA has a focus on FTEs, I wouldn't be shocked if that's the standard that's used. That being said, I also don't 100% know, and there hasn't been any material guidance on that. So questions when it comes to, well, what is an FTE? They haven't really said that. They'll need to clarify that. But I think for anybody who's trying to plan, using the ACA law is probably going to be your best planning scenario right now. So that's what we talk about on the FTE reduction ratio. On a payroll reduction ratio, we're talking about any payroll reduction of more than 25% and only the amount above that for an employee whose compensation is less than $100,000 per year annualized. So let's go through that very quickly because I've gotten some confusion on this one. I'm going to use examples. So if you take someone and they have a 30%, they make less than 100,000, and their payroll compared to the base period is 30% less than what it was, you're going to have a 5% reduction, the amount above 25% in your loan forgiveness amount, assuming that person makes less than 100,000. For anybody who makes more than 100,000, they are disregarded for this reduction, meaning you don't have to take them into account. You don't have to think about them really. They don't count for that reduction. So keep that in mind that anybody over 100 isn't an employee for this reduction purpose. It's only people below and only the amount above 25% that of their prior salary that's been reduced. Now, one question and one feature that's coming up here is for workforce reductions that occurred between February 15th and April 26th, 2020, which is 30 days after the act, that are restored by June 30, 2020, won't count in these reductions. So let's say you have a scenario where you've let some staff go, you've furloughed, you've cut hours, you've done any of those very, very plausible scenarios, and you, as a result of this program, reverse it by June 30th, they won't count against you. I think there's a lot of question on that mechanic still as well, because I don't 100% know the measurement periods that they're going to be talking about. Because, to me, if I keep someone reduced through June 29th and then one day put them back up, it's not going to hurt against me. There's going to have to be some give, take, and common sense that goes in there, but the regulations that drive how that's going to work, they're just not out there yet. So we're giving the advice as we see it and based on best guess, best estimates, but nothing definitive yet. And I think that's a key point I keep hammering home. maybe to save myself some questions later on, or just to kind of reiterate that we're flying a plane without a lot of our gauges here, so it makes it a little difficult. Okay, so those are the payroll protection loans. Those are going to be the most popular provision. They have the biggest apportionment in the bill for these SBA programs. Those are going to be the ones that everybody, I think, really wants to get their hands on because of that forgiveness feature. Above all, I want you to remember that the purpose of those is to keep employees on payroll during the period. Okay, so now let's go into briefly some other SBA lending programs and other programs that exist. So for a while, for a lot of disasters, the SBA has had what's called an economic injury disaster loan. So an EIDL or an EIDL. These are typically given out during hurricanes, tornadoes, wildfires, things like that, that this program's been around for a while. They have expanded this program and changed some of the terms of this program. So these EIDLs now have an availability of an emergency $10,000 grant within 3 days of application. That's what the law says. I've not heard of anybody who has gotten one for those have applied. I've heard people ask, has anybody heard of anybody that's gotten one? So we don't necessarily know, if they're definitely doing that. But they're supposed to give an emergency $10,000 grant within 3 days of application. Again, this is a separate loan program. Um, the grant is not required to be repaid, even if you get denied for the EIDLs. Any grant you get will reduce any payroll protection forgiveness. Along with the grants, they have now gotten rid of the personal guarantee for loans under $200,000, waive the potential credit elsewhere requirements, and have a potential faster turnaround time. So what makes these EIDLs different than the PPP loans? The EIDLs are going to be full loans. They are have an expectation of being repaid, and you are going to have to go through an underwriting process to see how much you can repay and how much you may be approved for. It's not like with the PPPs where we kind of know pretty much everybody's going to apply for and what they're eligible for because it's in the law. You have to apply and they have to approve you for the loan after seeing that you have the ability to repay. The SBA historically has not approved a whole lot of these. I don't know if they're planning on changing that. I get the sense they are, but these are, full loans that have a lot of work to get them and a lot of underwriting requirements. They're going to look at your financials, tax returns, and they want to see an ability to be repaid. Now they're trying to get them out fast. So they're allowing for quote unquote alternative procedures and a decision based on the applicant's credit score. But remember, this is a loan. The loans have a huge um, variance of terms. They can go for up to 30 years and they can be for 3.75%. Every single one of them is going to be underwritten differently. It's not like these PPPs where they're going to be a little more cookie cutter. These are going to have to go through each thing. EIDLs historically take between 21 to 45 days, and I would say probably even more than 45 days to get working right now. So, it's going to be some time before they're available. Now, an EIDL can be used for additional sources beyond the PPP loans. Look at the PPP loans, and they are only able to be used for payroll, rent, utilities, things like that. The EIDLs can be used to pay for accounts payable and suppliers. So you can use them for different purposes and apply for both and use them for different purposes. You can't double dip and get the same benefit. And one concern I have is people applying for these EIDLs not being very specific about them, or because they are in them and the applications are pending, the SBA comes out and says anybody who has a pending EIDL isn't eligible for the PPP. They say that that's not the case, but I've seen these things go a little awry before. I have concerns when it comes to applying to these EIDLs, particularly because they also are going to be required to be repaid, and they're going to take some time to turn around. So I'm far less excited on these EIDLs than I am on other programs, particularly that payroll protection program, because I feel like they're not as beneficial for most businesses. Again, a $10,000 grant can help a lot of businesses right away, and I understand that, and I understand the urge to go for it. And technically, an EIDL can cover a bigger loan than other than the PPP program. The PPP only covers 2.5 times your payroll costs. The EIDLs can be up for 2 million, but they require a personal guarantee and collateral for anything over 200,000. So you have to think about that a little bit too, that people are trying to stay afloat and not 100% sure of what's going to really be the future for their business. But you definitely don't want to compound your problem and apply for an EIDL of greater than 200,000 and now have a personal guarantee against you that, if something goes wrong, because we don't know what the future holds, leaves you kind of holding the bag. So we have looked at them, we have explored them. I'm hesitant when it comes to them, but I understand cases where they may want to be used and clients and colleagues who may want to use them, but I don't love them in the same way that I love the P and love the strong term, I guess, that I like the PPP loans for a lot of people. Finally, 501c3s aren't going to even be eligible for these EIDLs. So any 501c3 organization that's currently in attendance, um, this program doesn't even really apply to you for the most part because you're not an eligible borrower when it comes to this. Um, a question has come up that other 7A programs per SBA guidelines are not considered eligible borrowers. Things like real estate for investment, money lending, financial services, um, things like that. Kelly Sweeney pointed out the EIL includes nonprofits. It includes private nonprofit organizations, not 501c3 organizations. So there's a distinct difference there. Anybody who accepts public charity will be is considered a public nonprofit under 501c3 and is not a private nonprofit. So yes, technically private nonprofits can apply, but the public ones under 501c3 are not going to be eligible. Thank you, Kelly, for pointing that out. So, I just we'll see what we do with these EIDLs. Now, there runs a chance that they're going to continue to expand these programs, and maybe they become more beneficial. I think, on a personal level, there was a mistake of introducing two programs administered by the same agency at the same time for nearly identical purposes, saying you could only use one or the other. I think you created a lot of unnecessary confusion as a result of that. And I wish that it was, not two separate programs, but I can't get everything. And just to reiterate, 501c3s will not be eligible. Only private nonprofits are going to be eligible. And that typically means any nonprofit that doesn't get support from public sources. Okay, just a real quick highlight on the other SBA programs. I mentioned the SBA Express loans. Um, these have been increased to up to 1 million maximum versus 350,000. These still require traditional underwriting. They have less of a federal government guarantee for banks. I don't think they're going to have much utility this increase just because of the nature of the program. They're going to, they're still going to make this like any other loan, and it's still going to have the credit elsewhere requirement. So I don't know how much utility, if at all, that's going to have. But it did increase for anybody who's curious. Anybody who's in a current SBA loan will have a 6-month deferral. So anybody out there with a current 7A or a 504 will be able to get a 6-month deferral. I saw an email from a servicer this morning, one of my clients, talking about that, saying they know it exists. They don't necessarily know what to do with it yet, so they're trying to figure all that out when it comes to the deferral. The servicer made the recommendation, one I would agree with, again, I would agree with this, that You should make your scheduled April payment because you don't want to fall into arrears. If you overpay, they'll just refund you, or your deferral will go out 1 month longer. But you don't want to set yourself up to not be eligible because you're in arrears or something of that nature. I would very much advise that accordingly. Um, Finally, there's a separate program that's out there for companies with more than 500 employees. There's limited guidance to these programs in the law. It's not nearly as publicized or as popular, but it's basically part of the bill that was used for airline recovery and other distressed industry recovery, where it says that attention in a program should be given to allow access to credit for mid-sized businesses between 500 to 10,000 employees, um, on favorable terms of up to 2% interest with a six-month deferral. These loans will come with a limitation on dividends and equity transactions and require that you maintain or restore 90% of your February 1 staffing by September 30th, 2020. And you will not do any outsourcing in the 2-year period afterwards. Now, I don't know for sure, but other loans in this program have a compensation limit. It was one of the safeguards that was put in as a result of as a result of this. So I don't necessarily know that that's going to apply to these loans or not, but there's a distinct possibility. Additional guidance is expected on April 6th. I don't know how real that deadline is either. So that's the expansion of the lending programs. I think the most popular item here that exists. All right. Now I just want to go briefly into some employer and business tax changes. I'm going to touch very, very briefly on some of the individual tax changes because I had it as part of my presentation and it does affect a lot of us. We are getting some questions on that. And then I'll try to reserve time for questions. I will try to answer as many as I can, as best I can, knowing that this is still a new program for a lot of us and we're still trying to work our way through it, and a lot of specific answers may or may not be available. So there is now a new employee retention tax credit, which is a credit against the employer portion of Social Security, the 6.2% you pay for employees. Um, the credit is based on qualified wages at up to $10,000 per employee, and the credit is 50% of qualified wages, so a credit of up to $5,000 per employee. Again, 10,000 of wages, $5,000 credit per employee. Any excess credit above your Social Security liability is going to be refundable to any taxpayer. Um, I saw today on Twitter a draft of a tax form has come out, Form 7200, in order to facilitate some of the advanced refunds on some of these potential credits and for ones under the FFCRA. It's a draft form. I think they're still working through it, but that gives me hope that they're starting to work through these processes as fast as they can. I was happy to see that. I think it's a real positive improvement. But again, any excess credit above employer Social Security liability is going to be forgiven, or it's going to be refundable. I'm sorry. The requirements to claim this credit: you must be in a trade or business in 2020. This includes 501c, not 501c3, but 501c organizations and their operations. So they use the term trade or business, but it explicitly includes 501c organizations and their operations. Um, the business must either be fully or partially suspended due to government orders limiting operations, such as limiting commerce, travel, movement, basically the scenario we're in right now. As to what fully and partially suspended means, I'm not 100% sure of what their definition of that is going to be. Um, Gross receipts are one of the the other requirements is either the business must be closed or limited, or gross receipts are less than 50% during the same quarter in the prior year and then in the same quarter in the prior year. So if my second quarter 2020 gross receipts are 50% less than my second quarter 2019 receipts, I meet the second level of this requirement. Once I fall below that 50% threshold, I will continue there until gross receipts are 80% of my prior year quarter or through the end of the year. So now for employers with less than 100 employees, all wages paid are going to be considered qualified wages. For employers with more than 100 employees, only wages that are being paid while the employee cannot provide services are qualified wages. We don't know, as I said, precisely what fully or partially suspended means or not providing services means in this context. We're assuming the common English definitions until regulations are released, but they may have a very specific meaning as to what that is. And I don't, we just don't 100% know. Any employers in a PEO relationship will be eligible for this credit. Keep that in mind. We know a lot of people use PEOs now. We at Cerini are on one. It's a great service for employers of a certain size. Wages that are qualified for this credit are wages that are paid between March 12th, 2020 and December 31st, 2021. So that means payrolls that you have already run are going to be eligible for this. How to get the credit, how to claim the refund, um, that's still very much up in the air. Again, saw the new form come out in draft this morning. I couldn't 100% tell if it was just for the FFCRA or if it was for this credit, but at least I know they're starting to work through it. We're probably going to have to work closely with payroll processors as clients and accountants to implement this credit and figure it out. Business aggregation rules will apply, meaning that all aggregated businesses, think common control or common ownership, will be one employer, and employers can opt out of this credit if they desire. One area that we've talked about briefly internally is any deficit-funded organizations where their support is contingent on their spending. Some of these credits and programs may not necessarily be in their best interest in the nonprofit world. So that's something that we'll have to look through a little closer individually with our clients to really understand their funding sources and how all of that's going to work. But just something that I think is warrants consideration, something that we've already touched the surface on and thought about a little bit internally, but I think haven't really come to any concrete conclusions yet. So key thing about the employee retention tax credit. Any employer that participates in any of those expanded SBA lending programs that we just talked about will not be eligible for this credit. So if you take one of the payroll protection loans, this credit will not apply to you. Keep that in mind as you apply, that there is an opportunity cost here. And also, as a measure that there's a lot of people who are very concerned, does that PPP program have enough money? I don't know. Nobody knows, I think. They've made comments that if it proves popular, they'll try to appropriate more. But try to appropriate more and actually appropriating more are probably very, 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 very different contexts here. So that is the employee retention tax credit. So the second provision that employers have is a delay of payment of employer payroll taxes. So as a temporary liquidity measure, nothing's being forgiven here, but rather time. We're buying time right now. 50% will be due of your, the liquidity measure will allow deferral of payment of employer payroll taxes, meaning your Social Security. 50% of that deferral will be due on December 31st, 2021, 50% on December 31st, 2022. When that actually is due, not 100% certain. I think that's probably one of the later programs that really gets off the ground, especially how to pay the deferral. My assumption is going to be probably with your filing of your annual tax return. This does include 50% of any self-employment tax for paid by individuals. This will, as I said, require new forms and regulations. It's technically for any payroll taxes due between when the act was passed, March 27th, and December 31st, 2020. Once again, employers in a PEO relationship are eligible for this deferral. There are no size limitations on this deferral that I saw. To note, any employer, like the Employee Retention Tax Credit, that participates in the SBA lending programs will not be eligible for this deferral either. It's an either-or provision. All right, just to quickly cut on a couple of key business points. Any taxpayers who have had a net operating loss or have one this year, they are changing the rules on the NOL. The 2017 tax reform made NOLs only being able to be used for an 80% carry forward, meaning you could use it to offset 80% of your going forward income. What they changed it to was allow any losses from 2018, 2019, or 2020 to be carried back for up to 5 years, meaning I could take the loss, amend my prior returns, get any tax I paid back, or any losses from 2019 and 2020 can now be used to offset 100% of income. This impacts only taxpayers with a net operating loss. There's also a temporary reversal of the tax reform changes that limited net business losses to 250,000 in any given year. It now allows for any business losses in 2018, 2019, or 2020. Where that's going to be important is owner of pass-through entities, LLCs, S corporations, that have losses this year are not going to be limited on their ability to take them. And if those generate overall net operating losses, you'll be able to carry back and get some of the tax you paid prior back in, when we file returns in April of next year. So, any taxpayers that this impacts, they kind of know themselves who they are, and we'll be sure that they, work with them accordingly. There's also a change to the business income interest limitation. This is another tax TCJA, 2017 tax reform that was temporarily changed. This only applies to businesses with average annual receipts in excess of 25 million. That business interest expense was limited to 30% of effectively their EBITDA, their interest before earnings before interest, tax, depreciation, and amortization, or their net business interest income. The CARES Act will increase the percentage to 50% limitation for 2019 and 2020 and allows for an election to use the 2019 income instead of your 2020. Because if you think about your 2020 income, if you have a loss, that would make your interest effectively zero, and that would be a problem. So they're allowing you to say, hey, if you were profitable in 2019, we can use that as well. The tuition assistance programs have been expanded to include student loans. This is a welcome change, something that I won't be surprised becomes part of a permanent provision. Right now, it is only for 2020. But those unfamiliar with the tuition assistance program, employers can set up a program where they can pay for tuition for their employees for up to $5,250 per year, tax-free to the employee, deductible to the business. Well, in 2020, you can now also make payments towards your employee's student loans and get the same deductible on the business, tax-free to the employee. I don't know that right now many businesses are going to be looking to expand their benefits offerings, but if you are a business that's fortunate enough to not be facing adverse effects, number one, tell me your secret. Number two, this may be a potential, retention or attraction tool for many of your employees. All the non-discrimination rules about not favoring owners and highly comp still exist, and it's only for 2020. Wouldn't be surprised if it changes going forward. Last tax law change that was part of the CARES Act has to do with a technical correction for qualified improvement property. When the 2017 tax law was changed, there was a exclusion of a specific line that assigned a 15-year life to certain property. The end result was that property was unable to take bonus depreciation. We're talking really about leasehold improvements. So now they have added in that line of code as if it were always there, which allows anybody who had an impact of this in 2018 or 2019 to amend their return and fix it, or if they filed 2019 to do that as well, and will be fine going forward. So they've called this the retail glitch in the past. It's been fixed. Um, Taxpayers may have been able to 179 expense these, but those without business income may have not been able to take advantage of it. Okay, so now to go briefly over the FFCRA, the Families First Coronavirus Relief Act. It was the first act passed. The act had an expanded FMLA and paid sick leave funded by payroll credits for employers with less than 500 employees. The expanded FMLA allows for 12 weeks of job protected leave at up to 2/3 of pay for up to $200 per day. It can be used to assist in family care with a COVID-19 diagnosis, or because a child is unable to attend school and the employee is unable to telework. So people that, we're all working from home right now, schools are closed. For people that may not be able to do that or have some, some adverse impacts, there is a credit that allows you to provide, you're required to provide, I should say, Family Medical Leave Act leave, and it's going to give you a tax credit to help cover that for up to 10 weeks. The paid sick leave is for up to 80 hours, 14 days at an employee's regular rate of pay, up to $511 per day if there is a direct COVID-19 diagnosis or a similar item. They also allow for paid sick leave for a child's school closure or to assist in the care of a COVID-19 person that is in your family at the same rate as the FMLA above. The credits are going to be refundable against any payroll taxes required to be deposited. The law says it's only supposed to be against Social Security tax. The IRS FAQ says it's against all employer taxes that you can grab a credit. Don't necessarily know which is going to be the final determination yet. This program is for wages and leave that were paid after April 1st, so tomorrow. So anything prior doesn't count. Keep in mind that the leave here is really limited to someone who has a COVID-19 diagnosis, is under order of quarantine, or they're unable to work because their kid's school is closed. So there's a limited utility to this to a certain degree. It's not there to provide a credit paid leave because your business is currently closed. That's not the intention of it. The intention is because your business is still operating, but someone specific is not able to do something because of everything going on in those specific circumstances. Finally, as of right now, other tax deadlines on April 15th haven't changed. So there's no published relief for any March 15th pass-through entities that were due, and there's no change on May 15th for 990s that are due. Keep that in mind that right now the only deferral is the April 15th deadline. Okay, I have about 5 minutes briefly to go over these recovery rebates very quickly, and then I will try to answer as many questions as I can. So the recovery rebate is, I think, the first thing that got publicized. These are the checks to individuals. Now, obviously, this is not going to necessarily impact a lot of businesses, but I just want to give a brief high-level explanation of these, just in case you yourself may be eligible or you're a little more curious as to how they're going to work. It allows for credit of up to $1,200 per person, up to $2,400 for a married filing joint return. An additional credit of $500 is allowed for every child under the age of 17. Any dependents over the age of 17, college students, elderly parents, etc., will not qualify for the additional $500. The payments will be based on the following: 2019 tax returns if filed, 2018 tax returns, or your 1099 SSA if you don't have a filing requirement like many senior citizens may not have because their only income is Social Security. As of this morning or late last night, the IRS released a statement saying they're going to try to develop an online tool to allow people to update any banking information or to file a mock return for people that had no filing requirement otherwise to assist in getting these payments out. They want to make these via the bank account that you use to get your tax refund if you got one, if you were eligible. That's their intention. We'll see how it works. Um, the credit and payment are subject to a phase out, and they are expected within 3 weeks. The phase out begins at 75,000 for single taxpayers, ends at 99,000, begins at 150 for married taxpayers, ends at 198,000. This is a great graph from the Tax Foundation that shows how this works. That you have your 3,400 married with 2 children. Once you get to 150, you start to see your credit decline at 5% for every $100 above the threshold. Um, Very important to know. This payment is technically an advance on your 2020 tax credit, on a 2020 tax credit. It's not going to impact your refund. If you were normally in a refund and you weren't eligible for this or you got it, it's not going to change that in any way, but it is an advance on on a 2020 recovery rebate tax credit. You will reconcile this when you file your 2020 return. Any underpayment, let's say your 2020 income decline, you have a new child since you last filed, will generate an additional refundable credit. Any overpayment of the credit will not need to be repaid. The credit will be reduced, but not below zero, and any overpayment will be deemed a clerical error. So basically, everybody's getting a credit, and it gets reduced, but never gets reduced below zero. It would only be owed if you got reduced below zero. Um, we have changed the rules when it comes to 401k and retirement distributions. You can now draw up to 100,000 without the 10% penalty. Any tax due will be spread over 3 years. And you'll be able to repay it within 3 years. There's no RMDs required this year, required minimum distributions for over age 72. For 2020, this will affect our nonprofits. There is a new $300 above the line charitable deduction for taxpayers who do not itemize. 2020 only, and if you don't itemize, you can now take advantage of some of your charity donations that you may not have been able to otherwise. Finally, um, as I think it's been very well publicized, just want to reiterate, filing and payment deadline for individual income tax, state, and gift tax returns have been pushed back to July 15th, 2020. This includes both federal and New York State. Most states are expected to follow this delay as well, even if they haven't announced it yet. I would be shocked if not every state does. Our advice right now, we're still working to complete as many returns as we can, but maybe not necessarily file if any balances due. We don't want to be working on these tax returns while we will be, potentially able to actually go outside in June and July, or, after having to help a lot of clients through this PPP process, we're going to be pretty, tired. We want to get as many things done as we can now. Time period for making IRA contributions has been extended. Any IRS collections, levies, or existing installment agreements are suspended between April 1st and July 15th. The IRS is going to complete telework. They're saying no new field, office, or correspondence examinations will be started, and we don't really have much of a way of contacting IRS agents. So, basically, they're somewhat on pause when it comes to all of that. All right, so I see a bunch of questions that are sitting in the chat throughout the presentation. I'll try to answer as many as I can, as best as I can. Just before that, I do want to thank everybody again for their attendance. If you have any questions or comments, please feel free to reach out to us in order to get assistance with these programs. We are working right now on our internal systems and processes to help clients with all of these. We will be sending out separate engagement letters to all of our clients in order to assist with these programs to help what we think is necessary and help you apply. Just because of the craziness of everything going on right now and the disaster situation that we're in, we are offering a 25 or 20% rate discount off of our normal billing rates for assistance with these services. For any of our clients that are interested, feel free to reach out to whomever it is at Cerini is your contact. We will get you over the engagement letter. We will start working on these programs basically as soon as possible. We want to be as prepared as possible to get people into these programs and in these loans as fast as possible. So we've spent a ton of time working to get that in place. We're going to do everything we can to help as many people as we can as possible, but we make no guarantees that we're going to be able to get everybody a loan because we don't know all of the specifics, and no guarantee that your loan will definitely be forgiven as a result. We're going to start shortly after this working with our clients, getting out our new engagement letter that covers this. We're doing a separate engagement letter in order to set our expectations and limitations of our services and make sure everybody understands what's going on this time of uncertainty, to make sure that we have same expectations on what we're going to be able to do for everybody. But if you have questions, please reach out to us. If you want our help, reach out to whomever at Cerini is your contact. We will try to get in touch with everybody as we get more. Many of my clients who are in the room, I've had a chance to luckily speak with you over the last week or so, and I've been advising patients, and I know that probably sounds as painful for you as it does for me to tell you that, but we are now getting ready to really hit the overdrive to start getting ready for when these are there and to start really helping you with these programs. So um, I have the Q&A open here, so that's what I'm going to go off of. Um, I think I was able to hit nearly the majority of every question that was emailed to us prior, that were not overly specific and or not necessarily covered by this program. Um, so starting with the top here, is the PPL amount you can borrow limited to 2.5 times payroll, or is it the max of the forgiveness? It is limited to 2.5 times the, oh, Matt Burke already answered that. Thank you, Matt. It is limited to 2.5 times your average payroll, and the forgiveness is based on the spending over the first 8 weeks after the loan. Is there any way to get pro bono assistance to apply for these loans? At this time, we will more likely than not be offering much in way of pro bono assistance. If you are working with someone at Cerini already, please feel free to reach out to them and talk with them. But we will be charging a fee for our services, and it relates to consulting work to help people get these loans. How are seasonal employers treated with regard to the PPP forgiveness? There are special rules with seasonal employers. They are going to use slightly separate periods and slightly different calculation bases. I haven't had as much focus on those, because it's a little more nuanced and specific to only certain areas, but there are special rules as it relates to seasonal employers, particularly in what your loan base is and how the forgiveness is going to be calculated. When will the CARES loans be deemed forgiven? Must interest still be paid until the loan is forgiven? So there is no interest or payments due for at least the first 6 months and up to the first year on the PPP loans. The forgiveness will be done via a separate application. The regulations and guidelines for that are expected out within 30 days of the passage of the law. Don't know if that's going to be a timeline they're going to hit, but there will be a separate application that will require you to document your spending of the money, and you will submit that to your borrower, who then will give you a determination within 60 days of your forgiveness and if it's been proven or not. Does a 501c4 entity qualify or just a 501c3? Assuming that's for the PPP loans, the law states 501c3. So at this point, I will say only 501c3s qualify. The regulations could indicate something different, but I have to go off of the literal reading of the law and 501c3 organizations. If you've already applied for the EIDL loan, can you apply for the PPP when it's available and get and decline the EIDL loan when you get it? The answer to that is yes. You can. You are under no obligation to accept the EIDL loan, and you can decline if you get it if you are eligible to get it. Are you eligible if your payroll is paid by a third party? Okay, that one has already been answered. 1099 miss would include accounting and legal, which doesn't make sense. Yes, that is a very astute point. Again, I think they need to better define what they mean by some of these things. We don't 100% know, but if contractors are allowed, having copies of 1099s is probably going to be important. I don't think every single person you pay on a 1099 miscellaneous is going to qualify. Think about if you have a legal settlement that you had to pay. That person was a one-time payment. I don't know how much that's going to qualify. So, no real answer when it comes to that. But there. Uh, so there's some questions on unemployment. We haven't really touched on much of the unemployment stuff here. A lot of that is going to be between the employees and New York State itself. Just know that the state is expanding unemployment. The bill does allow for additional pandemic unemployment insurance. It's going to be administered through New York State. New York State is, as they've said, getting just bombarded with requests when it comes to all of this. They've actually assigned everybody a day for each of their individual letter names to apply in order to try to streamline all of this. If people are having their hours or pay reduced, they may be eligible for a prorated amount of unemployment. What if what if I was laid off? What if I laid off staff because my business was deemed non-essential? Um, can I still qualify? You can still qualify for the SBA loan, but you won't have any forgiveness, and without having any staff on board, you won't really have many permitted uses. Again, think about what the concept of what they want this loan to be is. Um, is to keep people employed, keep your business going. So if you laid off your staff, yes, you can technically apply, but what are you going to use it for? Because the main use is to pay for your staff. I read somewhere last week that it may have changed. Your business has to be profitable to get a loan. Is this true? I have not heard anything of that nature. Um, you won't get an EIDL if you're not profitable. That I can tell you, but an EIDL is not a PPP loan. They're separate programs. An EIDL goes through an underwriting to make sure that you can repay it. How will this affect OPWDD agencies who are being reimbursed for rents, and rent is a component of the PPP? That is a terrific question. Um, I'm not an OPWDD or funded expert when it comes to that. My specialty more relies on the tax and business advisory side, so I don't necessarily have an answer for that. But if you reach out to your contact at Cerini, we'll be able to kind of work through and how that's going to work. We don't 100% know yet either. Um, how do SBA rules for affiliates work for the purpose of determining whether a business is eligible for a PPP loan? SBA affiliate rules, they're complex. Nobody ever really thinks about them except for when they go for SBA lending, if we're being 100% honest. They largely focus on a facts and circumstances determination of control. So if an owner of one business can control another business, either through an agency relationship or through being the majority shareholder, that will generally be included as an affiliate. So it'll be common ownership and common control is the general sentence of all of that. Can you confirm the eligibility of private 501c3 organizations for the EIDL? Yes, EIDLs have said that private nonprofits are available to take out those loans, largely I think because they have a person that exists behind them that they can hold recourse for it. Are there other considerations under the CARES Act that will impact the decision to request a loan or loan forgiveness? Yes, there are those payroll tax credits that we discussed that you will lose access to if you get one of these loans. Even if you don't ask for forgiveness, the immediate participation will eliminate those credits for you. Oh, hi, Pam. How are you? In addition to federal programs, what New York City and New York State programs are you available of in order, what is the best order of application? So New York City has two programs that I've seen. One is called the Small Business Continuity Loan Fund, which allows for up to a $75,000 loan at favorable terms. I do not know. I'm sorry. The applications have come out. I know there was a pre-interest form last week. I haven't heard of anybody getting one yet. For employees with less than 5 employees, New York City had a grant program that is available for up to a certain amount. I know we have applied for um, this for one of our clients. We have not heard back from anything on it yet. So I get the sense that those programs are in the we're overwhelmed, trying to do it as fast as they can stage. The number one priority is going to be applying for the PPP loans, but I think you need to take in mind that there's no double dipping allowed, and um, the regulation could state that applying for a state and local version of these programs could prohibit one from applying in the PPP loan based on the certifications that are required. Uh, let's see. If you apply for this $10,000 loan, this precludes an entity from applying for the PPP. Technically speaking, no, but I have some personal concerns based on just the way the SBA may do things that I don't know if it's 100% advisable. I think everybody needs to work through that decision with their advisors and decide what the best route is. But technically speaking, you can apply for the EIDL, get the grant, decline it, and get the payroll protection loan. But one of the certifications is you are not do not have an application pending for duplicative costs. So you may want to write the EIDL that you're not doing it for the payroll protection loans. Can a business receive both a PPP and an EIDL? You can receive both, not for the same costs. What are the relevant decisions for deciding? Okay, I see Matt already answered that as well. So that one we have there. Relevant considerations. It's going to be your eligibility for the EIDL versus your eligibility for the PPP. I saw that employers that get a PP loan cannot get this tax credit. That is true. Yes. SBA website says an EIDL is okay for a 501c3. If that's what they say, I've always read it and I've heard that it's only for private nonprofits. I think some of their guidance is a little muddled when it comes to that, but the prior ones were always available only for private nonprofits. And other guidance I have seen from nonprofit leaders besides our firm has said that they're not eligible. The worst that happens is they say no if you can apply, but I don't believe that. I don't necessarily know 100%. My knowledge is that 501c3s are only for private nonprofits. Um, are employees who earn 100K excluded or only their income over 100K? The law says compensation in excess of, so we're assuming only the amount above that. Where does the parsonage allowance fit in? I don't think anybody's actually thought that one through yet. I couldn't even remotely tell you how that one's going to work. I thought that it was the 80 hours of emergency sick leave at a payable for 100%. It's payable at 100%, but up to $511 per day. The sick leave, as far as I know, does not cover scared to leave the house. That has been a semi-common question. Everything I have read is that is not there. I've seen that um, on a couple different sources, particularly from the New York State as well. For PPP loans, will payroll issued after a business reopens still qualify for forgiveness? Will a current senior lender need to subordinate their position to the SBA? Payroll for forgiveness needs to be in the first 8 weeks after the loan is originated. So that, some businesses may not want to apply right away because they want to wait till later on in the window in order to have that, but you have to keep them aware of the restrictions around keeping your current staffing and FTE levels versus everything else going on there. So there's some considerations that need to be thought through there that you'll probably need to have your full staffing back by April 26th in order to qualify for forgiveness based off of kind of how I think it's going to work. Will the senior lender need to be subordinated? I don't think the SBA is going to really have a position because there's no guarantee, but it'll probably be the most subordinated position without any personal recourse when it comes to that. I think the banks are working through that particular question right now. What are considered prior debt obligations? Any debt that you have in place prior to February 15th, 2020 is what they said. I don't think they 100% have that defined through what they think that is through yet. Again, you can't use it for principal, only the interest, but I would think lines of credit or the like will be eligible for that sort of item. Will you be answering questions via email? I believe I tried to answer every question that was emailed to us. I'm trying to answer as many questions as I can. As you can imagine, it has been absolutely hectic. We're working on getting our staff up to speed as fast as possible to have as many resources available to answer questions. The idea behind our webinar today was the rising tide will lift all ships. So let's get as much baseline knowledge to everybody so we don't have to go through maybe some of the basics of the program, and then we can start making our way and making faster, more accurate, better decisions. It's like, yep, okay. Matt answered that one, but I'll just do this one. At this point, can we get in touch with our bank? We recommend speaking to your bank now. While they're not ready, they will tell you if they're not going to accept it, and you may need to find other banks. They don't 100% know what's going to happen yet, so there's a big question as to all of that. And we're just looking now. Let me see. Okay, looks like about an hour ago, as I was worried, there was some treasury details on the uh, loans release, so I'll take a look at those, but they don't look to be very different than what I saw prior. I am self-employed and continue to stay open through my business. Do I qualify for a tax credit next year? Not 100% sure what you mean when it comes to that. The individual tax credits are limited to your income for any given year, and the payroll tax credits are only for employees if you have less than 100 employees. So I don't know how much tax credit. Ellen. Let's see. If an application was already through the EIDL, should any action be taken now for a conversion to the PPP or wait till the action comes available? I don't know. I don't know how much of a response you're going to get if you try to even reach out to the SBA to do that. Again, you can technically apply for both. I'm erring on the side of conservatism here because I don't want to take a risk of losing the money program just because I wanted to go for other programs. You can go for both. You can apply for both so long as it's different costs. So that's kind of a determination. I think that's a little less appropriate for a webinar Q&A and rather maybe your overall facts and circumstances. The PPP amount is max of 2.5 payroll for just 1 month. Technically speaking, yes, it's 2.5 times your average monthly payroll cost. Your average monthly is determined by the prior 12 months to the loan per the law. How they're practically going to determine that, we'll find out. New York City is also providing a loan of $75,000 at no interest. Would this conflict with the PPP? I can't definitively say. I don't 100% know. I you know, one of the certifications is that you are not going to be seeking reimbursement for, um, these costs under another program. So if you look right here, that the borrower has not received a loan for the same purposes. So I would be wary of that program because of that reason. I don't normally, and I guess maybe this is some PTSD of doing a lot of government stuff, but the you know normally regulations come out and they're a little scary, and they don't normally go very taxpayer friendly. So maybe I have some PTSD of thinking about all the ways that things we thought were going to work one way worked another way, and it left people high and dry. So that's why I'm trying to act as conservative as possible here, maintain the integrity of the big money program that exists, and make sure everybody says that is there. Okay. Are corporate pension contributions for 2019 due, or they have to be before the September due date if it's on extension? As of right now, assuming you have a 3/15 extension, you're still due on September 15th. Assuming your corporation is a C Corp before 15, the extended due date has not changed. It is still October 15th, 2020. For any fiscal year filers that have a 6/30 year end that are on extension, the IRS has indicated in their FAQs that those are eligible for the relief through July 15th, 2020. Will there be a rebroadcast late? Looks like Kelly, you probably take care of you on that one. They contracted claim unemployment benefits now. People were incorporated but not having sources now. They are saying that they have expanded the the unemployment benefits to people who are not normally eligible as a result of this federal pandemic assistance. I would recommend that they would apply. Affiliates. So affiliates are a control question because please discuss the issue of affiliates. So it has to do with the level of control that someone has. There's basically a control person within each one of these organizations, and any quote unquote control person that's going to exist, anything else that they can control is going to be considered an affiliate. We're looking at understanding those a little better. It's not a law that we normally run across, but we are looking to run through that. If your payroll is $1 million a month, you're entitled to $2.5 million. That's pretty accurate, yes. What if your lease payment is $1 million a month and utilities are? Your loan is limited to the compensation. Looks like Matt already answered that one. If a for-profit business doesn't file a federal tax return, would this disqualify them for any of the loans? Nothing's been said on that either way. They have said that tax returns may not potentially be required for the lending criteria. I'm preparing just in case because I think they're so used to asking for them, they still may. I don't know. That's a great question. I wish I had a better answer for you. 501c3s do qualify for the employee retention tax credits. So there was a question, qualifying wages are to be used to pay for any of the expanded FMLA or PTO. There's nothing about 501c3s not applying for the the payroll retention tax credits. It says includes all 501c organizations. Okay. If independent contractors are counted towards the PPP, will they count towards the 500 employee limit? Terrific question. Not, that's why that's another thing in the column of why contractors may not count because of something like that. Should employers with less than 25 employees be paying an employee out under quarantine symptomatic to the regular cycle, or should said employees be filing through payment benefits through the state? The federal law has a technical exclusion for employers with less than 50 if it would provide some sort of hardship. The federal law allows for the paid sick leave to be used for this. I'd recommend you use there, and then New York State did expand some of their PFL uses as well. So you'd probably use that after you exhaust any of the paid leave provisions. If you already filed your tax returns, do you have July 15th to make your IRA contribution? Yes. Okay. Can I bring back my staff even as there no work and qualify for the SBA loan, or should I let my employees continue to collect unemployment? I think that's a very interesting question, and one that I think is business to business, person to person. You can bring back your employees and pay them to do nothing. That's partially what the overarching idea of this potentially kind of is, that, hey, we want to have less unemployment and keep people on private sector payrolls. Let's do it through here, and let's try to support businesses that are operating. This loan only really covers, if you think about it, 2.5 months of payroll. I guess part of the question is, do you think you'll be back and running within 2.5 months? Are wages paid to independent contractors during this time and in the upcoming months who provide home services considered qualified wages that are eligible for this credit? We still don't 100% know how qualified independent contractors will work. Some of the text indicates they will, some of the text indicates they may not. So we're still waiting on further guidance as it comes to that. If most of your employees are part-time, does that mess up the the FTE requirements? We don't know what the FTE calculation necessarily going to be. That's I think it's going to be on an ACA calculation. So long as you have that in place for your 1095Cs, then that'll be a problem. Can you keep key employees and lay off the rest and still be forgiven? No, the forgiveness is predicated on keeping a level of staffing that you had prior to kind of the start of this on a real blanket state. So if you have layoffs, that will significantly reduce your forgiveness. Okay. So SBA loans are typically not available to 501c3s. That is correct, but they are available under the PPP circumstances. There seems to be some controversy on the application for the EIDLs. My reading was that they were not, but some people are saying they may be. We'll have to revisit that, but basically you'll see some guidelines that say nonprofits and some say private nonprofits, and in the past it was almost always private nonprofits, so that's what I'm really going off of. Your payroll average will be on the prior 12 months. Okay. The paperwork for the PPP is expected to be run through your bank, not through the SBA. Very, very important question. Do employees have to pay sick leave up front? No, I think they pay sick leave as it's earned. Okay. When will the form be available for the PPP? Hopefully Friday. That's what we're hoping. We don't 100% know. Is there an expected deadline to apply for these programs? They run through the end of June or when the money runs out. That's probably going to, if the money runs out, Congress has already made I'll say Secretary Munch has made a statement that if the money runs out, the program proves popular, they'll look to appropriate more. Time will tell. If your business is solvent with substantial funding to get through this, but is impacted, would you qualify for the loan and forgiveness if you meet the other requirements? Or is this for companies with solvency issues? That's a terrific question. It's not 100% clear when it comes to all of that. The good faith certification is that you want this loan or need this loan because of the uncertainty surrounding the current economic conditions, and this loan is necessary to maintain and support ongoing operations. That's a certification, that's a self-certification that you're going to make under penalty of perjury. They haven't made any indication, plus or minus, that there may be some sort of financial means test as it comes to this. Again, they suspended credit elsewhere, so that to me is a kind of indication that they will not be looking at all of that. But I really wish that there's not enough to really tell you. Okay. Thank you very much for the thank you and kind words, by the way. I really appreciate that. There's a bunch of requests for stuff and emails in the chat. I think the Cerini team is working through all of those, trying to get you everything. Again, you had to register through Lula. Our information is available on our website. Kind of afraid to look at my phone right now because I don't know how many emails I have. If it's less than 50, I'll be happy. That's a very specific question. We can discuss your particular circumstances if you'd like, if you reach out to us. That one's a little more specific. With regards to forgiveness, will exceptions be made for employees that voluntarily leave? Terrific question. Hope so. Unknown. What if layoffs related to job performance, not COVID related? Will there be a chance to grieve? Again, I think it's on the same vein as that. I'm hoping and I'm assuming there will be a mechanism to do so, but hope and assume are loose terms there. Can't guarantee anything when it comes to that. Just want to say thank you to Matt Burke, who's going through and answering some of these questions in chat as well. So if I am skipping your question out loud, it's because Matt has thrown in an answer for you. All right, so that covers all the questions that were there. We did record this. I hope I didn't mess it up. I'm prepared to get yelled at if I messed it up. Sorry for Cerini team if I did, but that basically concludes our webinar. Those are all the questions. Again, for anybody who's still around, I thank you very, very much for your time, and hopefully we can start to work together on helping getting you what you need. So thanks a lot, guys. Take care.